Today is January 26th of 2022, and Wall Street did its job sending a message to Jerome Powell: do not mess with Wall Street. So the sell-off preceding Fed Chair Powell's speech worked as planned. He came out and said, we're basically not going to do anything. We do not want to upset markets. This is the hourly chart of Bitcoin right here. We'll get back to that in a second. But basically, the summation of what Powell said was, we're not going to raise rates right now. We're going to potentially raise them in March. He did not say they would definitely for sure raise rates in March, but he said that if they did raise rates, that would be the first time that they would do it. Did not say how much. That he said they were going to let the market indicators tell them what needed to be done. They're going to be nimble. They're going to look at the data, and they're just not sure what they're going to do. They haven't made any decision, but they have put principles in place for how they're going to make decisions depending on the economy. So basically what he's saying is he acknowledged that inflation is high, and he said inflation was transitory without using the word transitory. He said he does expect some of it to subside. He feels like employment is strong. He feels like the economy overall is strong. Given the events of the pandemic that he thinks that are subsiding. So basically what they did was they said, we're going to wait and see. We want to reduce our balance sheet. We are going to use interest rate policy to control inflation. And they said that they were going to do whatever they deemed necessary to keep inflation under control. However, they're not doing anything right now. So today's speech was basically priced into the markets. The markets were pricing in a rate hike sooner, I think, and potentially more aggressive. And if they'd have come out a little bit more aggressive, we would have seen a big sell-off. And we did see a little bit of a selling at the end there. So the markets were up going into the speech, and then they dropped quite a bit. The S&P had a big drop right at the end there. The Dow was down a little bit, S&P down a little bit, NASDAQ came back flat. But the interesting thing was the cryptocurrency market. So we saw Bitcoin spike right here while Powell was talking, and we spiked all the way up to 38,953, almost a $39,000 candle. And then it dropped all the way back down, closing the hour at 37,588. And now we have dropped again. The interesting thing, and what's interesting about all of this in terms of what the Fed said, is the dollar. So let's take a look at the dollar. Dollar is straight up while Bitcoin is straight down. And again, we need to realize and understand that Bitcoin and cryptocurrencies are risk assets, just like stocks. And that's not a label. That's not derogatory. It just is what it is. They're risky assets. They are a risk on trade, and they are in lockstep with Wall Street, as you see what happened with the dollar there. So here's the Dow Jones at the end. Dropped quite a bit at the end. It was up while Powell was talking. NASDAQ, same thing, straight down pretty much from the time Powell started talking. And then the S&P, big drop right at the end there. In fact, that's one of the biggest short time period drops that we've seen. I think it was like 800 points or something like that. Or what was that? It was down from 4429 to 4,300, 80 points or something. So that was a big short time period drop for the S&P. And if you look at the rest of the cryptocurrency market, pretty much everything is following suit. So this is telling you that we are still in risk off. What the Fed sent a message to the market saying was that, yes, we are going to continue. We're going to start reducing rates. We're going to have to continue reducing rates. And the biggest thing, the reason this is happening, the reason we're still in risk off and the markets are still going to sell a little bit, is that they left the door open and there's a lot of uncertainty. What the markets want is clarity and certainty. What they don't know is exactly what the Fed is going to do and when and how fast, because the Fed just left the door open and said that we're going to use interest rate policy. We feel like the economy is strong enough to withstand several rate hikes. So they basically told Wall Street, we are not going to bend to you. We think the economy is strong. So he kind of set the flag back up the flagpole and said, continue taking profits, but don't go too fast. But he did say that easy monetary policy, accommodative policy from the Fed will be no more. So they did say and signal that there will be an ending to the Fed's accommodative interest rate policy and monetary easing moving forward. So where does that leave us with cryptos? Like I said, if you look at the price action, it's all pretty much the same across the board. A lot of algorithms, a lot of programs running here with buys and sells. But at the end of the day, we are still in risk off, and we are still in price discovery mode in Bitcoin, not the price discovery to the moon, but price discovery in terms of finding that bottom so that we can, so that Bitcoin can have a little bit of a retracement. And like I've been saying for the last few days, we're kind of dancing around in this area, and it can look like maybe you're going to look for a reversal. But what we do have is we have a lower low and lower high. So we're continuing on that path of a downtrend. And what we're looking for is for Bitcoin to find a base so that it can retrace back up into what, whatever level it's going to retrace back into. We've been looking at that Fibonacci 618 to 702 level. And let's roll this down right here where current levels are right now. In that 618 to 702 would be in that 50 to 60, $50 to $58,000 range, but it can retrace anywhere from the 0.5 to the 0.618 to the 702. If it clears the 702 and more importantly, the 786, then we could have a macro trend reversal on our hands, which would be a lot of fun and would be interesting. But what Bitcoin traditionally does is going to retrace into those levels and then potentially continue on back down with a longer downtrend, depending on what's going on in the economy, where you could see something like this, where it comes around and just kind of heads back off into more of a longer term retracement. And that's typically where you're going to see the altcoins run. So that's what a lot of the market is expecting. And as we know, oftentimes when everybody is expecting something, often it doesn't happen, but that's generally what's happened in the cycles of Bitcoin over the years. Even this little mini recovery here, we had to drop, retrace, drop down into a longer consolidation and final capitulation before it's off into a new trend and a new bull market. Same thing here, 2018, 2017, 2018. And you can go back even further, but the most recent 2017, 2018, we had our peak, drop, retrace, final capitulation, bounce, and then off into a more sustained consolidation downtrend before we have a rebound and resuming a bull market trend. And, it's choppy, right? So this is a new asset. There's a lot of emotion, a lot of human emotion into this price action. That's what this does. One other thing too, I've noticed a couple of comments, people, when I say closing candles, that's what's important, not the wicks up and down, but it's more about the daily closes. And a couple of people don't understand that have been watching, made some comments and said, crypto trades 24/7. That's correct. Bitcoin and crypto markets are trading 24/7, but UTC 5. So if you look up UTC 5 in your time zone, you'll see what time that is. For me, it's 7 o'clock Eastern Standard Time. But the UTC 5 is when the Bitcoin and crypto markets reset for price action. So even though they're open 24/7, these daily candles are printed on market open and closes. And then, of course, you have your weekly open and closes and you have your monthly open and closes. So in order to be able to chart price and track price, you have to have a resetting of the price. The market doesn't actually close. So when people say close, it just means that hour is done, the new hour starts, and that's what these candles represent on the hourly, is a new hour starting and ending, either up or down. If it's green, it ends on the top of the green. If it's red, it ends on the bottom of the red. That's your price action for anybody watching that doesn't understand what I meant by closing. And again, it's not the lower time firm trend. If you're trading swing trades, scalp trades, short-term trades, and obviously the lower time frame price action is what matters to you in charts. But at the end of the day, when you're looking at macro trends and reversals and things like that, you got to be looking at the daily closes, the weekly closes, and the monthly closes. That kind of tells you where you really stand. It shows you major market structural support when you're looking at these higher time frames. The weekly moving average is what's critical and important. This is the 200, and anytime Bitcoin has gone down to bottom levels and major downtrends, it's always touched that 200-week moving average. And then of course, we've been looking at our death cross. So let's go back to the daily on the death cross. And we've been kind of just tracking where this 50 crossed the 200 right here. And it did that both times in the recent trends. The death cross occurred the exact amount of days from the peak. So we looked at how many days it would be till the last time it bottomed after a death cross. And that's where we extrapolated the time, and it gave us that February 14th timeframe that we're looking for that retrace to begin. Now, understand when I say what I'm looking for there is that retrace to the 0.5 to the 618, maybe 702, somewhere in that range, for it to kind of retrace up and then roll back over into a more sustained consolidation downtrend to where it might ultimately then find a macro bottom for the cycle, like it's done in the past, before we can have continuation on to try to set a new all-time high. So when I say Bitcoin's in price discovery, it's trying to figure itself out. It's trying to figure out, is this the bottom for this little local price area here for this this trend that we're in right now? Kind of like this was a local bottom here before we had a retrace, that became a local bottom, before we had the peak and what's looking like the all-time high for this cycle. So the question is, where is that local bottom going to be before we retrace? And at the end of the day, what Bitcoin is an asset that's been in a since it's been in existence, has been in a longer term 10-year uptrend. You could call it a bull market, you can call these bear markets, whatever you want. Uptrend, downtrend is what I look at them. Bullish, bearish, that's just fun in terms of having a lot of fun with what you're talking about. But basically, Bitcoin has been a long-term uptrend. And if you see what I'm talking about these peaks with the retraces, drops, that final capitulation into the bottom before you get to your rebounds. This is your March 2020 low before we had this rebound here. But what we do know is that this is going to be very different and very interesting. We've got a couple of months now before the Fed meets. The Fed doesn't meet till March. So I'm looking for that retrace going into February. So this all kind of plays in where it may take a couple of weeks where, basically what we have today is the 26th of January. So February is still a few days off. That February 14th timeframe is still basically 19 days away. So this could bounce around for maybe 19 days before we start to journey back into that retracement. And it could spend the month of February retracing. And when we get into March and the Fed goes ahead and hikes interest rates and takes other action, reducing asset purchases, and we'll see where the economy is, where inflation is, and how much they need to act at that point, but they're definitely probably going to act. We don't know for sure, but they said they're going to. That could signal and be the trigger for a more sustained downtrend. So basically, we have a Fed reprieve right now. They're not doing anything to upset markets. We're going to continue to see a little bit of deleveraging. We're going to be bouncing around. It's going to be choppy in traditional markets as well as in crypto markets. So this is where we're at right now. And if you look at this right here, this gave a lot of people hope for a reversal. But I think what we're going to see, like we've seen in other cases, a lot of times you'll get a double bottom before it moves off to the ultimate retracement. Kind of like you see this little double tap here, this double bottom. It's like you see a double bottom here before it moves up. You see this price action here that we have right over in this area. This is back in June, July. You see these bounces here. That's kind of what we're doing here in terms of price discovery on the low end, not the discovery on the high end, but trying to figure out the bottom. We're trying to discover what's our base, where's our bottom. Are we going to break through this major market structure right here at that $30,000 level? Are we going to go down and touch it, or is 35,000 what I'm looking at? Are we going to retouch there, 35, 36, and then go into the retracement? And that's what I'm looking for. That's what I'm expecting. I'm not saying it's going to happen. Anything can and will happen. As you have seen, a lot can happen with Fed policy. A lot can happen with the overall macroeconomic situation, the global situation with the threat of conflict, wars, pandemics, things like that. So these assets are risk assets, and they are definitely reactionary to global macro climates. I know a lot of people just look at the charts. They don't look at anything else. As an investor, I'm not a technical analyst. I look at charts just to kind of see the patterns, the price action, and kind of get an intuition of where things are going so I can make my decisions on a, I'm a swing trader. So what I like to do is I like to buy these lows and sell these highs. And if you go into the hourly, depending on, these types of areas here where it seems like it's just going to go and fall off a cliff, that's the area to buy. And then you want to sell on the way up. And I'm not saying the exact bottom or exact top, but when it gets down here, you can kind of get a feeling that it's going to stop. So you can buy right here. And then the same thing when it comes up here and you start getting the pushback and resistance in these areas, you sell. So this is kind of what you're looking for. And as you can see, we've been in this pattern for a while where since the beginning here, at 69,000, we had that initial drop, kind of a little bouncing around, then it gets a little bit of a pump, then bam. Same thing, get a little drop, a little bit of a pump, bam. So what you want to do is you want to be buying on these low, if you're swing trading, you want to be buying and then selling, buying and selling, buying and selling. And it's difficult sometimes. And, I got caught in a trade the other day on Solana where I thought it was done and it wasn't. So I got stopped out and then I just went ahead and bought back in at the bottom and then caught it back up at the top. So it's been kind of laddering itself down, working its way down. And right now, this is our little price action area that we're in here. And it looks like we're setting up to roll over, touch the bottom again, then go back off into that retracement that we've been talking about. So that looks like what we're trying to do here. And it looks like Powell has said they're not going to do anything right now. So as long as everything else remains the same over the next couple of weeks, we should be working this price action out to tap that bottom again and set it in and head off to that retracement. And then all eyes will be on the retracement. Do we clear the 0.5? Once we clear that, we look for the 618. Once we clear that, we look for the 702. And those will be your levels along the way to see if we're just retracing for another rollover, or if we have some sort of a macro reversal on our hands. And I'm just not real confident in that right now because the Fed policy, they're going to raise interest rates, they're going to reduce the balance sheet, and they're going to eliminate asset purchases. So they're going to get easy monetary policy days are done, which is what created a lot of this run up. So it'll be interesting to see how price reacts to that, where Bitcoin goes, and what the fair value ends up being for Bitcoin, and what the limits of Bitcoin is when it does roll over again in the future, and whether or not $30,000 holds. My thesis is $30,000 is a macro floor in Bitcoin. That's what I think. It looked to me back here like it was going to go lower. I thought for sure it would go lower, and it did not. There are a lot of buyers at $30,000. But there's a lot of people, a lot of smart people out there, a lot of very experienced people that think we're going to break right through that 30,000 once we retrace and roll over. And here's your retracement levels right now off of that wick low. Our retracement back to 0.5 is in the 50,000 range, 0.6. Now, if you bring it up to the close, it makes things a little bit different, and it brings that 0.5 to 53. But I think we're going to roll off of this wick low to kind of figure this, and we're going to take it from the wick high there. So that kind of puts us in that $51,000 to $55,000 range for the 0.5 to the 618, 702. If we get up in there and clear that, then we could be looking for a reversal. But as we've seen, anything can and will happen with Bitcoin. We had a double top here before this rejection, and we had a lot of resistance up here. We set that first all-time high back in, when was that, April, May, before the sell-off. So that's what I'm looking for. We will see how this progresses. And in the meantime, keep your eyes on the macro picture out there. We still have the conflict with Russia and Ukraine that could weigh heavily on the economy. A lot of uncertainty there. As I record this now, Bitcoin is continuing to drop. Price action all across the board is continuing a little bit of a sell-off, but we're still above this range low that we put in at that 35.36 initially, and then this wick down. This is the hourly price action down into the 33. So we're still above 35, which is that macro bottom that I was looking for right here. It looks like we're about, we're going to try to test that again. So we'll see. Eventually it's going to roll over, either touch that and move forward, or it might drop a little lower and maybe it settles in down at this 33. So that's what we're looking for. And that is what I am looking at today. So far, so good. No major changes on the front from the Fed, other than, yes, we are going to take some action, but we don't know. We're not going to tell you how much. We're not going to tell you when, because they don't know. They're going to wait and see what the climate looks like in the future before they make any decisions. I hope that helps you. I hope you're doing well wherever you are in the world. I will see you on the next video.